Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, June 13th, 2016. Well, folks, let's take a look at the S&P 500 here via the SPY, which is the tracking ETF. Take a look at the rollover we've seen here. So the market continues to sell. The sell signal that I had, the most powerful sell signal that I've ever come up with, came right here, folks, literally right here. We saw the rollover right after, a retest, pullback, a retest again. It couldn't really break through that level. Then the collapse began. And again, this collapse should take us down. I'm going to give you the level right now. Short-term support is going to be right here. So you're getting very, very close to short-term support. This is going to be a day trading level, maybe a small day bounce or so right off of this level, which is a pierce of 209, 208.90 to 85 level on the SPY. If you continue down, you have a major gap fill then at 207.90 right there. And then following that, you're going to have a gap fill down here as well. But these are your next two levels. Again, 209.85 and 207.90 right here. And again, we're coming very close to the first one. You can play it as a day trade. Should get a quick 20 to 30 cent bounce right off of that level. Now, again, the key here is to understand what's going on here. So we're coming into the Federal Reserve announcement. We've seen a bad jobs data note. We've seen oil start to pull back. We've seen, obviously, the horrific terrorist action in Orlando over the weekend. Brexit vote is next week. There's a lot of concerns for the market, and that's why you're starting to see some selling. All right, we don't know the economy, what the deal is there. There's a lot of extracurricular things that could cause problems, and that's causing volatility to spike, obviously the markets to collapse back down here. It's not a huge drop, about $1 on the spiders, but nonetheless, you add it to Friday's decline, it is turning out to be a very beautiful drop here across the board. A couple stocks that we're keeping an eye on here. Apple was very, very weak early in the day, but it's gotten a little bit of a bounce off of those lows. But again, notice you have a pivot point support right here on Apple at around the 96.70 level. So just very short-term support there. But I want to point this out. This drop is much more steep than this slow incline, and this slow incline never took out this high. That is bearish net bearish. I repeat, net bearish. So look for further downside. Even if you get a technical bounce off this level, it'll be short-lived, and you will see further downside. Keep an eye on the GDX, guys. GDX continues to gap up, but not hold its gains. This tells me that this is headed much, much lower. Some of you guys like to play DUST, DUST, which is a very high-risk ETF since it's a triple, but again, it can pay you off handsomely if you are correct. So we'll keep an eye on that as well. LinkedIn, needless to say, got bought out today. All right, that was a beautiful buyout by Microsoft. Pretty much a surprise. I don't think anyone expected that. The key is to note here, Twitter trading up on the back of that. Even on a down market, the stock's still up about 6%. I did pick this up pre-market just after the news and was able to make about $600 on it. Just a quick long trade, couple thousand shares on the pop because of sympathy. That's what we call it when one stock in the general same sector gets bought out, and then obviously everything in that sector gets a little bit of a boost because the valuations change immediately. Other than that, that's not much else to talk about. Let's take a look at the USO, which is rolling over just a little bit. Had a good gap down, but then bounced, but is now coming back in, which is also being helping the market sell off a little bit here. Gold, as I mentioned, doing a little bit better, even though the GDX is having some struggles. But this is very important, guys. Look at the GLD, how it's gone up over the last hour or two on the 10-minute chart here on the GLD. And then I want you to basically go over to the GDX chart, and the GDX chart continues to not really get a bounce. That is a bearish indicator. That's a negative divergence. That is something that, again, is telling me that net over the next couple weeks, you will see more downside in GDX. And again, I kind of wish it would bounce so I could pick up some more on the short side, but right now it's holding steady, and most likely we'll see some rolling over action in the very near term. All right, so again, that's just a quick summary of what's going on here in the markets. Again, keep an eye on the spiders at those key support levels. Again, if we zoom out, you can see them right here. Number 1 is right here. Number 2 here. There's a couple in-between ones along the way. There'll be a little bit of support right here, and then a little bit more right here at gap window, and then gap fill. So these are all your supports on the spiders heading lower that you need to pay attention to in the coming hours of this day if we continue to see some selling. Bottom line is, come join us at InTheMoneyStocks.com, folks. There's action, there's profits. It is all here. Take the 7-day free trial. Take care.